Cryptocurrency might sound like something out of a sci-fi movie, but it's real, it's growing, and it's changing the way we think about money. Today, we're breaking down the basics of crypto in simple terms: what it is, how it works, and why it matters. No confusing jargon, no complicated charts, just the key things every beginner needs to know before diving in. Today, we will talk about cryptocurrency explained, what every beginner should know. So, before we start, make sure to hit the like button and subscribe to my channel. 1. What is cryptocurrency? Cryptocurrency is a digital or virtual form of money that relies on cryptography for security. Unlike traditional currencies, it is decentralized, meaning it is not controlled by governments or central banks. Instead, cryptocurrencies operate on blockchain technology, a secure, transparent digital ledger that records all transactions. The most well-known cryptocurrency is Bitcoin, created in 2009, but thousands of others exist, including Ethereum, Ripple, and Litecoin. Cryptocurrency can be used for payments, investments, or as part of blockchain-based applications. Understanding its digital nature is key for beginners, as it differs from cash, cards, or bank accounts. Transactions are verified by a network of computers rather than a single authority, making cryptocurrencies resistant to fraud and tampering. Learning what cryptocurrency is and how it functions lays the foundation for exploring its uses, risks, and investment potential. 2. How cryptocurrency works. Cryptocurrencies operate using blockchain technology, a decentralized network of computers called nodes. Every transaction is recorded in a block, which is linked to the previous block, creating a chain. This ledger is public, secure, and tamper-proof. Cryptography ensures that transactions are verified and ownership is maintained securely. Cryptocurrency wallets store private keys, which are needed to access and transfer funds. Transactions are irreversible, meaning once completed, they cannot be undone. Miners or validators verify transactions, earning rewards for their work in some systems. Understanding these technical aspects is important for beginners, even if only conceptually. The decentralized and secure nature of cryptocurrencies provides benefits such as transparency, fast global transactions, and low fees. However, it also introduces unique risks, like the need for careful wallet management and understanding market volatility. 3. Types of cryptocurrencies. There are thousands of cryptocurrencies, but they fall into several categories. Bitcoin is a store of value similar to digital gold. Ethereum supports smart contracts and decentralized applications, making it more than just a currency. Stablecoins, like USDT or USDC, are pegged to fiat currencies to reduce volatility. Altcoins include all other cryptocurrencies with varying purposes and technologies. Tokens can represent assets or provide access to services on blockchain platforms. Understanding these types helps beginners navigate the market, identify potential uses, and avoid confusion. Each type has its own risk and reward profile, liquidity, and use case. While Bitcoin is often considered a long-term store of value, other cryptocurrencies might offer high growth potential or technological utility, but come with increased risk. Knowing the types is essential before investing or using cryptocurrency. 4. How to buy and store cryptocurrency. To buy cryptocurrency, beginners typically use exchanges like Coinbase, Binance, or Kraken. These platforms allow users to trade fiat money for digital currencies securely. Once purchased, cryptocurrencies should be stored in wallets. There are two main types: hot wallets, online, more convenient but less secure, and cold wallets, offline, more secure but less accessible. Security is crucial because cryptocurrencies are prone to hacking and theft. Beginners should enable two-factor authentication, store private keys safely, and use reputable platforms. Understanding storage and transaction mechanics is essential to protect funds. Unlike traditional money, lost private keys mean lost funds permanently. Proper storage strategies, including backups and secure access methods, ensure that your investment remains safe while participating in the digital currency ecosystem. 5. Benefits of cryptocurrency. Cryptocurrencies offer several advantages. They enable fast, global transactions without intermediaries, often at lower costs than banks. Their decentralized nature reduces reliance on governments or banks and offers financial inclusion for people without access to traditional banking. Cryptocurrencies can also serve as an investment, potentially offering high returns. They enable programmable money through smart contracts and decentralized applications, creating opportunities for innovation in finance, gaming, and supply chain industries. For beginners, understanding these benefits highlights why cryptocurrency has become popular worldwide. It's not just a speculative asset. It represents a new way to store, transfer, and use value digitally. However, benefits come with risks, so informed participation is critical. 6. Risks of investing in cryptocurrency. Cryptocurrency is highly volatile. Prices can swing dramatically in hours or days. Lack of regulation in many countries increases risks of fraud, scams, and exchange failures. Hacking incidents and lost private keys can result in permanent loss of funds. Market liquidity can be low for smaller coins, making buying or selling difficult at desired prices. Investors are also exposed to legal and tax uncertainties in different jurisdictions. Beginners must understand that cryptocurrency is not a guaranteed investment and can lead to significant financial losses. Risk management strategies, such as diversification, small investments, and using secure wallets, are essential. 7. How to evaluate cryptocurrencies. Before investing, beginners should research the cryptocurrency's purpose, technology, team, adoption, and market supply. White papers explain a coin's objectives and functionality. Market capitalization helps gauge size and stability. Community support, partnerships, and exchange listings indicate credibility. Evaluating historical price patterns and trading volume also helps understand liquidity and volatility. Avoid investments based solely on hype or social media trends. Learning how to assess cryptocurrencies ensures informed decisions, reduces exposure to scams, and helps identify assets aligned with personal goals. Knowledge of evaluation techniques transforms investing from speculation to strategic participation, especially in a market as new and rapidly evolving as cryptocurrency. 8. Cryptocurrency versus traditional investments. Cryptocurrencies differ from traditional investments like stocks or bonds. They are highly volatile, decentralized, and often unregulated. Traditional assets offer steady returns, dividends, and legal protections, whereas cryptocurrencies can provide rapid gains or losses. Unlike companies or government-issued bonds, most cryptocurrencies have no intrinsic cash flow or guaranteed value. This makes them riskier but also potentially rewarding. For beginners, understanding the differences helps set realistic expectations and integrate crypto into a diversified portfolio. Cryptocurrencies may complement traditional investments by adding growth potential and diversification, but they should not replace foundational financial strategies. 9. Regulatory considerations. Regulation varies widely by country. Some governments fully embrace cryptocurrencies, while others restrict or ban them. Tax obligations exist for buying, selling, or earning crypto, and failure to comply can lead to penalties. Exchanges must often follow KYC, Know Your Customer, and AML, anti-money laundering rules. Beginners should research local laws, understand tax reporting, and use compliant platforms. Regulatory awareness ensures that participation in the cryptocurrency market is legal, safe, and responsible. Ignorance of rules can result in legal trouble or financial loss, so informed compliance is essential for safe long-term investing in digital currencies. If you liked this video and would like to see more like it, please give it the thumbs up. Leave a comment and click the button to subscribe.